Okay, so this is just a really quick summary of the effects that debits and credits have on the accounting equation, particularly the expanded accounting equation. I do have a worksheet to give you guys that I will post up for you guys that is basically this. That's just showing you here's how you make a determination on whether you need to debit or credit something to increase it. Typically, we talk about things in terms of increasing. It's just a little more helpful, I find. So, but I will get that out to you guys as well. Hopefully, it'll make this understanding these debits and credits a little easier. Like I said, this is kind of when some people start to lag behind a little bit because it is a more complex system to kind of explain. So I do want to talk to you guys about a couple of ways that you can help yourselves remember this. And this first one is what we call dealor, okay? You can just say it dealer or dealer, whatever the case is. But what you can do is you can ask yourself, what happens if we increase net income? Well, retained earnings increases, right? More net income means we get to keep more of it. What happens if we increase expenses or dividends? Well, retained earnings decreases because expenses decrease net income. If we decrease net income, we get to keep less as retained earnings. And dividends just directly reduce our retained earnings, right? So those are the impacts that we have on retained earnings. So this is why expenses and dividends increase with a debit and not with a credit, because they do the opposite thing of everything else on that side of the equation, right? So if you can remember the acronym DEALOR for normal balances, right? It will help you. It essentially means that on the left, you have dividends, expenses, and assets, okay? And on the right, you have liabilities, owner's equity, and revenue, okay? So anything in this left-hand column increases with a debit. Anything in this right-hand column increases with a credit, okay? So that's one way to remember it. I also really, really like this acronym, DEAD, okay? This is how I learned it. I've always found it helpful. So essentially, it just means debits increase, expenses, assets, and dividends, okay? If it is not an expense, an asset, or a dividend, it increases with a credit, okay? So if it's a liability, is it in your DEAD acronym? No, then it increases with a credit. Is owner's equity inside of our DEAD acronym? Is it an expense, an asset, or a dividend? Nope, then it increases with a credit. These are the only three account types that are going to increase with a debit, okay? So those are two ways that you can kind of try and remember these, and you can ask yourself, okay, I'm looking at, they told me that I've increased my accounts payable account. I know that payable means the liability. Do I increase this with a credit or debit? Well, is liability in my DEAD acronym? It's not, so I'm going to use a credit to increase that. That's kind of the thought process that you can use to walk through these and try to remember what accounts hold what balances, okay? Next thing we're going to talk about is recording transactions inside of a journal, okay? And this is where you're going to need to know whether or not you are increasing or decreasing an account with a debit or a credit, okay? So it's very important that we understand this and that you use this format, okay? So when you have a journal entry, you're going to have a date, and then typically you're going to see debit and credit on the left and right. Sometimes you won't see that. It's just understood that if it's on the left, it's a debit. If it's on the right, it's a credit, right? Because that's what that means. Debit equals left, credit equals right. You're then going to have your account name, and you always, always, always list your debit first. Always list debits first, okay? Always. And then your credits. And the way we're going to represent that, typically speaking, is you're going to see your debit left justified, and then you're going to see your credit indented slightly to the right, okay? And then typically you'll see a description of the transaction. Purchased $5,000 of pencils on account, okay? Something like that. and your amounts go under your debit and credit headers. So just do your checklist. Do you have the date of the transaction? Do you have the name of the accounts impacted? Do you have the dollar amount recorded? And remember, this is important. We record, measure, we measure, record, and communicate, right? That's the whole point of financial accounting. Again, debits are always listed first. This is incredibly important for your homework. Okay, know this for your homework. Do not list your credits first. Even if you have the amounts and the accounts right, it is going to tell you that you are wrong. So make sure that your debits are first. Okay, again, your debits will be left justified and your credits will be slightly indented to the right. Okay, so journalizing really is the first step in recording these transactions. Okay, the journal, and this usually comes up as a question on exams. The journal is just a chronological list of the company's transactions during the period, okay? So it's just a chronological list. Doesn't help us determine balances, ending balances in accounts or anything like that. It simply just tells us this is when this happened in this exact order, okay? After we post to the journal, we're going to post things to the general ledger. We're going to post these transactions to the general ledger. We will often refer to the general ledger as the GL. So if you hear me say GL, just know I'm talking about the general ledger, okay? So posting is what we call transferring the debit and credit information from a journal to the individual GL accounts, the individual general ledger accounts. Okay, so the general ledger is what provides us the individual transactions. We can see each account, each transaction that happened in that account during the period. We see it in the ledger. Okay. Typically, when you look at these visually, you're going to see them as a T account, and that's why I find T accounts so helpful. Okay. And you can see this format right here is very similar to what you would see to a T account, right? Debits left, credits right. Typically, you're going to have your journal entry number, some kind of reference ID, and then your ending balance, whether that's debit or credit, depending on the account that you're using. We also have something called a chart of accounts. This is something that some students get confused about, okay? Use the chart of accounts to help you. It is going to help you. I posted a chart of accounts worksheet, a chart of accounts PDF file for you guys on Blackboard. Please use it. It is going to help you determine the account names that you should be using, okay? This is very typically what a chart of accounts is going to look like for you. But just be aware that just because an account title is in the chart of accounts does not mean that we will use that account, okay? You don't have to use every account in your chart of accounts. When I worked at Mercy, the chart of accounts was thousands and thousands and thousands of account names. We did not use all of them, okay? So just be aware of that. It does not mean that the account is used in the journal or the general ledger. So chart of accounts is simply just a listing of all available accounts, okay?